And so glad that you guys could join us. And for our ShiftCo members, you hear us talk a lot about the topic of profit with purpose. And today we're going to give you some practical techniques for how do you grow your profit while fulfilling your purpose. And we've got a wonderful guest speaker to help with that today. Just as a little backdrop, we're going to cover the stages of business growth, and that is more important in conscious business than even traditional business. This particular type of platform is well known in traditional business, but it's even more important in conscious business. We'll also be talking about what it means to combine purpose and profits. And then our guest speaker, who's one of our strategic partners, will talk through what would be the basic things that you need to know so you understand how your business earns a profit and you can maximize your impact by maximizing your profit. We'll also talk about the difference between insights and reports, which is how you get to good decisions. And then we'll end with just a tad bit about ShiftCo and how we help our members elevate their purpose while generating more profit so they can make a bigger impact. Just a little bit about me. I started what is the equivalent of a Purposeful Shark Tank in 2009. Lots of ups and downs with that, but we now have 5 launched brands. We have 3 more in cultivation. We usually cultivate a brand for a couple of years before we take it to market. I love what I do. I just feel like I'm the luckiest person in the world to have a team of people that work in our portfolio that run these companies, and I get to serve people and support our leaders. But a couple of lessons along the way. I had been a serial entrepreneur and been successful previously, and so I thought when I started this Purposeful Shark Tank that it would be easy and it would be simple. And if you look at the logo, Share on Purpose, it's a very subtle indication of you probably, depending on your orientation and how you see the world, you probably either see 2 people working together. So that's a big part of it. But you might also see a dollar sign. And the idea behind our portfolio was always that we would generate profits, generate dollars, lots of dollars through collaboration. And in order to get to that vision of how we would share on purpose and how we would reinvest in purpose, I had to come face to face with the fact that there was part of me that didn't believe that I could make a difference and make money, that I thought those were mutually exclusive. And I did a lot of self-sabotage in the early years of this portfolio because deep down, I didn't really believe that I could do good and make money. I thought that they were separate. And I had to come to terms with that. Second, a purposeful business really does earn money in order to make a bigger impact. The owner of the business is not so much money motivated. We want to be profitable. We want to generate wealth, but it really is about something bigger than that. And we're proud of that. And the key is to have both, of course. And then the other hard lesson learned was that purposeful businesses evolve as much as they grow. And that's what led me to create something called the Conscious Business Growth Platform. And these are the business stages that we talked about. And I had seen these stages in traditional entrepreneurship, but I had never seen them as ferociously as I saw them in conscious business. When I saw this, we had invested in 14 concepts. This was 2010, 2011. We had 14 different concepts that we had invested about almost $1 million in. And they were each at these different stages, and they were struggling with very, very different things. And that's when I began to understand that in conscious business, the businesses really do evolve very differently. And the funny thing about that was they evolve based on the business owner or the CEO's own evolution. So my ability to evolve myself as a conscious leader directly correlated to where my business was and where I was stuck from a leadership standpoint, from a personal standpoint, from a business skill standpoint. So I began to build this methodology as I was working with these 14 different businesses that we'd invested in. and began to see that there are very different things that occur in each of these different phases, and very different things the business owner has to learn, and very different things that the business owner has to evolve into, things that we have to overcome, fears that we have to come face to face with in order to move through these phases. And that's the basis of ShiftCo, is this underpinning. Before I bring on our guest speaker, I want to talk a little bit about what it means to grow a conscious business. I love this picture, and I feel like it very appropriately represents a conscious business. When you're a purposeful and a conscious business leader, your business has like a calling to it. It's like this thing you can't not do. And a lot of times it doesn't always make sense, or sometimes you start it and then you don't like what you built and you're trying to figure out how to re-engineer it because there's this thing that's pulling you in your life. And what that thing is your gift, and the gift is how you make the world better through your business. And that's the thing that's really calling. And that's the frustrating part, because we know we're supposed to be doing this work, and sometimes what we've built doesn't work quite right, yet we know we're supposed to be doing this work, and we have to reinvent it and evolve it and shape it and mold it into something that will work. And this idea of our business is a gift, it's our gift to the world, it's the thing we're supposed to be doing, really underpins why conscious entrepreneurs are very different. When a conscious entrepreneur is thinking about their product or service, they're not saying, will someone buy it? In fact, deep down inside, they're afraid people won't buy it. A conscious entrepreneur says, will it solve a problem? Because the gift is the problem we're meant to solve. The second thing, when we're pricing a product, conscious entrepreneurs have a lot of challenges with pricing. Whereas a regular entrepreneur says, what will someone pay? A conscious entrepreneur is constantly saying, how much is it worth? And if you think about that, if you're struggling as an entrepreneur, as I was, with self-worth, so I struggled for many, many years with self-worth, then when I go to price my product as a conscious entrepreneur, I'm going to underprice it. So that notion of how much is it worth when the business is me, we can struggle with that. And that's one of the things through Pure Confidence and some of the other tools that ShiftCo brings to our ShiftCo members that we help with to help overcome that, so that you can cross over to the success area. And the ultimate success for a conscious entrepreneur is, do we make a difference? Not how much money can I make, but can I actually make a difference? Yes, I want to make money. Yes, I want to be wealthy from my business, but I really want to make a difference. And that frame led me to some research that I want to share with you about 4 types of conscious entrepreneurs. Most of us start as a purposepreneur, as I did in 2009 when I started the first concept. And that's where the business idea usually, it's the genesis of the idea, is this idea that I want to do meaningful work. And some of us then evolve into, we want to work with certain people. And that's when you become a heart-centeredpreneur. And purposepreneurs and heart-centeredpreneurs, they love what they do, but they don't necessarily want to scale the business. They really just want to scale for impact and make a bigger impact. On the opposite side of that is a way bigger impact. And the ones that really want to make a big, big, big impact, where they're trying to shift industry and society, there's social impact ventures, where the work and the impact matters. And then there's mission-driven brands. And a mission-driven brand is they are collaborating to shift industry and society. They want to leave a mark in some way, and the work and the people matter to them. So just take a note of which of these you think you are and where you are in your evolution. There's no right or no wrong. But from a financial standpoint, the decisions that you make in these 4 boxes are very different. And how you look at your business financially is very different and very important to understand. And before I talk about that and then introduce our guest speaker, I want to talk about how I uncovered that. So the first book that I read in my own evolution as a conscious leader was The Purpose Economy by Aaron Hurst. and this notion that there really is a new economy. And back at the time when this book came out in 2010, I thought, oh, it's going to be here by 2012. Well, it's 10 years later and it's taken a little longer, but I do think we're on the cusp of this transformation that Aaron talked about with the purpose economy. And his notion is that in the purpose economy, businesses serve all stakeholders. And I know that that's how it is in our portfolio, that my customers and my employees are just as important to me as the profit. And so this idea of the purpose economy was also underpinned in another book by Peter Fisk called People, Planet, and Profit. And he talked about it's not just people, but conscious entrepreneurs really care about the planet and they really want to make eco-friendly choices. And then the last most fascinating thing is on the profit side, because now we are seeing this come to bear. Purposeful brands, according to Conscious Capitalism and B Corp, are outperforming the stock market, even as crazy as the stock market has been the last 5 years, by 42%. And the other fascinating thing is Eric Ries, who's one of my idols. He's the guy who started Lean Startup, has just created a new stock exchange just for purpose-driven companies. So you don't have to go public on the NASDAQ or the New York Stock Exchange. You'll eventually, in a couple of years, be able to take your company public on this new stock exchange. So as you can see, the world is really, really shifted. And the main reason why we're here today as conscious entrepreneurs is to begin to understand this fundamental question of how does your business make money? And even as a conscious entrepreneur, and this is me earning from my mistakes, not just learning from my mistakes, even as a conscious entrepreneur, you've got to understand how your business actually makes money. And whether you're following principles from Profit First or the lemonade stand or any of those methods out there for understanding how your business makes money, you still have to look at the basics. You still have to break the business down into a couple of pieces. And the one big mistake that a lot of conscious entrepreneurs make is they hire somebody to take care of their books and they get the reports each month, but they never really look at them. And they don't really understand where they are. They don't really get the insights from them because it's overwhelming. And so what I always recommend entrepreneurs do is to outsource that function, but to do it with a partner that's going to help you get the insights. And I'm happy to introduce one of our strategic partners and the one that we selected for this very important area of your business, which is Varo Team. Giuseppe is the co-founder and the CEO. And I asked him to speak to our members and guests about these basic things that we need to know to make sure we understand how our business makes money. So Giuseppe, the floor is yours. Thanks for joining us. Take it away. Share your wisdom.
Sounds good. Thanks for having me. Hi, everyone. One of the first things that I just wanted to say and to kind of add to exactly what Terry was talking about was when it comes to your finances, you really want to think of not having a lack of access to clean financial statements as kind of having a shoe without shoelaces. The shoelaces are what holds everything together, right? Or you could also say it's the ground floor or the foundation of a building, right? If you don't have a good, strong foundation to build off of, then your likelihood of being able to build on top of that is slim to none, right? You're going to be struggling, you're going to be flailing. So you want to make sure that you have the foundation in place and that you have the structure in place in order to achieve growth. One of the things that I'll start with and that I'll say is that I think a lot of people, the first thing that they make a big mistake with before I even get into the budget is that they think that cash equals profit. And when you're looking at financial statements, which we'll get into all of the things that you need to do before you get there, just because you have cash in the bank account doesn't necessarily always mean that your business is profitable. So in accounting, we have two different types of what we call a basis, right? So you have cash basis and you have accrual basis. In cash basis, we're following the ins and outs of your bank account, right? So, you make a sale, money comes in to the bank account, maybe 2 months later, you recognize income that 2 months later when that cash hits your bank account. You incur a bill, you pay that bill 2 months later, you incur that expense when the money leaves your bank account 2 months later. In accrual basis, if you make a sale today, but your customer doesn't pay you until 3 months from now, you're booking that income on the same date that you earn the sale, right? That you've completed the work, even if your customer doesn't pay you. The same thing with bills. When you receive a bill, right, and you enter a bill, let's say for an electric bill that was for electricity that was during the month of, I don't even know what month it is, during the month of November, but you're not going to pay it until December. Well, the electricity was for November, so you need to recognize that expense as being a November expense, even if you don't pay it until December. So what is the benefit of those two different types of bases, right? So for most small businesses and for most entrepreneurs, they only really look at their financial statements for one purpose. And the main purpose of that is to do their taxes at the end of the year. And most CPAs like to do taxes. It's easier and it makes more sense for most small businesses who don't really have the knowledge to be able to keep books in accrual basis reporting, right? They do taxes in cash basis 9 times out of 10, unless you're a larger company or you're a C Corp or depending on how you're organized. But most small businesses are in cash basis. The problem with cash basis is that you're not going to get a real true picture of the financial health of your company, right? In accrual basis, you're going to follow exactly when you're earning money through that invoicing process, which recognizes income on the date that you bill your customer. The same thing on the expense side. You're going to make sure that the expenses incurred in that month are exactly what is expensed in that month. There's no surprises and everything is lined up. It's called the matching principle in accounting. And so I always recommend that if you have the ability to manage your books in accrual, and by that I mean entering invoices for everything and entering bills for everything that you have an expense for. If they provided you with a bill, you should be entering it into an accounting system. That will allow for you to be able to run your books in accrual basis. And this will give you a better picture of what your cycle looks like. So that's number one. So as we get into, what is it that I need to do on a regular basis in order to maintain good financial management of my company, the first thing that I always start with is, do you have a budget, right? So whether or not you're new or you're established, right, you always want to make sure that you have a good idea of what your income and expenses are going to be, right? So if you're new, you have to do a little bit of thinking and you need to sit there and brainstorm like, well, what's reasonable in terms of income and what's reasonable in terms of your expenses. If you're more established, you have the option of looking historically at what you've done in the past. But I also don't recommend that you entirely rely on that, because you need to look at what you've done historically. And if you're going to make significant changes in your operations, in your sales strategy, in how you run your business in the upcoming year, you're going to want to make adjustments for that in your budget. So you're going to want to make sure that that's set. So everybody should be working right now around November and December of each year to develop themselves a budget for the upcoming calendar year. And if you have key, stakeholders within your business that you can tap into and speak to in order to compile more accurate budget, speaking to your vendors, possibly hiring consultants, getting pricing on that, you should all be doing that now, right? Once you have that budget, you can actually, if you have a good accounting system that allows for you to upload that budget into it so that you can run an actual versus budget report, then that will help, and it will be another check on making sure that you're staying on top of your finances, right? Let's go to the next one. So the next thing that I'm going to say is don't take shortcuts, right? I think it kind of goes without saying that your finances are probably one of the most important things that you're going to be looking at as an entrepreneur and as a conscious entrepreneur. And so you want to make sure that if you don't understand something, or if it's over your head to do it on your own, that you take on a partner who's going to help you and knows what they're doing. But as Terry said before, don't just hand it off and then just forget about it. You need to stay actively involved. And we always tell our members that we are only good as you communicate with us. So if we're reaching out to you and we have questions and you're not engaged, then your bookkeeping is not going to be up to par. And when you go to a CPA, or if you come to us to get your taxes done, you might be missing out on deductions. You might have things recorded incorrectly. And that is all, we take responsibility when responsibility is due, but as business owners, you have to take responsibility in staying engaged in those partnerships. So don't take shortcuts. Make sure that you're bringing in professionals when you don't have the answer yourself.
And I want to comment on that, Giuseppe, if I could, because when I became an entrepreneur, I was very insecure about my ability to read financial statements, and I was afraid to talk to my accounting person that was managing the books for me, and she would ask questions, and I didn't understand half of what she asked. And I think that's an important thing to understand, and it's one of the reasons why we try to do trainings like this. Is it's okay to not know. Like, this is one of the more complicated areas, and it's one of the reasons why I like working with Borrow Team, because they try to really help us look at those basic things that you need to know. And if you're working with somebody that doesn't make you feel comfortable asking questions and admitting that you don't know something, that's a red flag. So that's why we love Borrow Team so much, is they're very patient with those of us that the numbers are not the easiest thing for us. And that's got to be okay, because you can't ignore this. So back to you, Giuseppe. I just wanted to drill that down.
Yeah, absolutely. There's definitely no stupid questions in this area. And the more questions you ask, the more competent you're going to become, which is great, because then your questions will change and you'll start asking the right questions. And so and the right questions, meaning that you'll be able to ask questions that are going to help you more understand your business better. So the other thing that I always recommend that people make sure that they do is that they're consistent in reviewing your financials, consistent in communicating with your partners, with your bookkeeper, with your accountant, and consistency in understanding what you're looking at. So, if you've decided on a strategy for analyzing your numbers, which I'll talk about in a minute, and you want to make sure that you're consistent in how you're analyzing those numbers, right? You don't want to change from month to month, because if you're comparing apples to oranges, you're not going to get a good comparison. You really want to compare apples to apples. I'll get into what that means in a second. Go ahead to the next one. So you want to evaluate your profitability. So we can talk more about that. So within your financial statements, and I'm going to talk specifically about the profit and loss statement, you have your income on top, your expenses on bottom. Income minus expenses equals net income. We talk about that all the time. I'm sure you're all very familiar with that concept. Now, there's a couple of different ways to evaluate your profitability, right? You have your income, your gross revenue, right? And then you have what's called a direct cost. So if you're selling a product or if you're selling a service, whatever your direct cost is going to be different. So for example, if I'm an online retailer and I'm selling t-shirts, my cost is going to be all of the raw materials that are purchased in order to manufacture that t-shirt. Maybe it's shipping and delivery costs that are associated with getting the t-shirt from point A to point B. If I'm a service-based company like Borrow Team, in order to deliver the product that we sell, which is a service, right? We need people, right? So our direct cost is actually our staff, right? So we have staff costs, and we also use a pretty robust finance stack in order to get done the work that we need to. So software is also what we would consider a direct cost. So there's an area of the profit and loss statement that's often not used by many small businesses, and that's the cost of goods or cost of service section, which falls in between income and expenses. So you have your gross revenue minus your cost of goods or cost of service, equals your total income. And then from that total income, you deduct regular operating expenses. Regular operating expenses, that's your dues and subscriptions, that's your advertising costs, that's, other things that are not directly related to providing the end product or service. So you want to start to think about, like, what are the key elements of what it is that I'm selling, and what are the costs that are directly associated with delivering that product or service. And those should fall within the cost of goods or the cost of service section of the P&L. And that's one way that you can evaluate profitability, because instead of after all of those operating expenses, you're just looking at the direct cost associated with generating that income. And you're going to take whatever your cost of goods is and divide that by your gross revenue, and you're going to get what your gross profit margin is. So that's like one way to evaluate profitability. You can also look at your net income number as well, right? It's something that you don't want to forget about, but it depends on what stage of growth you're in. If you're in growth mode and maybe you're taking on a lot of investment, then it's a possibility that you might be running a big deficit, and you might be losing money month over month, and you might be in a burn, and that might be fine. But that's why it's important to evaluate profitability from a top line number, meaning total income minus cost of goods, instead of looking at it all the way at the bottom where you have all these other costs that might not be factored in. So that's one thing that you should do. If you're unsure of what's best to do in evaluating the profitability of your specific type of business, do some research, go online. Make sure that wherever you're going, in order to pull what it is that you need to do in order to evaluate profitability for your industry, that you're pulling from credible sources. So I'm sure Shiftco could probably point you in the direction of some online resources, or there might be, you could just go out and Google it. The big four accounting firms have industry-specific KPIs and metrics that they put out every year that are for larger companies, but can also be adapted to be used for smaller businesses. And just make sure that wherever you're looking for that the source is credible. And then let's go on to the next thing. Okay, remember your receivables. So this is a mistake that a lot of entrepreneurs make on a regular basis. Everyone gets so wrapped up in the operations of their company and, delivering that product or delivering that service and making the impact, that they forget that they need to collect money from their customers, and people can get into real trouble. It sounds really silly, but you need to remember to be looking at your receivables on a monthly basis at a minimum, and making sure that you're collecting on all of these great things that you're selling and delivering to your customers. And then next, control your expenses. So every month when you're reviewing your financial statements, you should be doing what's called a variance analysis, right? Where you review your profit and loss on a month-by-month basis, and you look at what was the change from one month to the next. So I spent $1,000 in office supplies last month, but this month it was $6,000. So what is the reason for that? And do I know exactly why it went up by such a significant amount? And you need to understand what the reasons for your expenses increases and decreases are. Did something, maybe it was 1,000 last month and it's 0 this month. Was it because you didn't enter a bill that you needed to enter, et cetera? So you want to look at that, keep your expenses at, a minimum, focus on making sure that you're running a lean, mean operation. But then once you've cut all that you can cut, or once you've kept it as lean as possible, then you need to focus on growing your revenue, right? So don't put an overemphasis on controlling your expenses, really put an emphasis on revenue generation. That's what I always tell everyone. And then finally, listen to the experts. So kind of goes back to the don't take shortcuts. If you're unsure, ask. There's never any dumb questions. Make sure that you're getting weigh-in from the people that you've employed to work with you, that are experts in their field. They're experts in their field for a reason. If you're not comfortable with whatever it is that they're telling you, then they might not be the right expert. You might need to go out and find a new one. But just because they're telling you, if they're a good expert, just because if what they're telling you is something that you don't want to hear, doesn't necessarily mean that they're a bad expert. And I love working with partners who are going to give it to me straight and tell me exactly what, the truth is. I don't like anything sugar coated. If I'm doing a crap job at something, I want to know about it. I have an HR consultant, I have a marketing consultant. And when, things are falling down, I tell them, like, don't tell me that I'm doing a great job, because I already feel like I'm not doing a great job. And by you trying to finesse to make sure my ego isn't harmed, it's not doing anyone any favors, and nobody has time for that. So let's just move on. So that's my advice there. Let's go to the next slide. If anyone has any questions, feel free to put them in the chat. I'll try and keep an eye on that. All right, so insights versus reports. So good decision. So what is the whole point of reviewing your reports regularly? You've got to review your reports on a monthly basis, right? And why are you doing that? You're doing that because you want to use them to make smarter business decisions, right? So all of your decisions about how you run your business should really have their basis in some sort of financial background, right? And that's where your financial reports and statements come in. So if you know what your profitability is, if you're going to launch a new product or service line, what is the profit margin going to be on that? How many of those do you have to sell in order to turn a profit? What are the advertising dollars that you're going to need to put into launching this new product? Is it going to convert to profit right away, or is there a build period, et cetera? And just make sure that everything is properly mapped out and that you've thought about every aspect financially of what changes you're making to your core business.
And I think I'd add to that just real quick that, again, don't be intimidated by those reports. There's lots of ways. If you're whoever you're working with doesn't take the time to help you read those reports, there's lots of ways. We have programs inside ShiftCo to help you understand how to read those reports, but you do need to understand. They can feel like Greek until you do understand them. You do need to really understand them so you can make good decisions. So I just wanted to comment on that, and then back to you, Giuseppe.
For sure. Yeah. The next thing that I was going to talk about was knowing your cycles, which is part of the review process, right? So if you're looking at your financial reports regularly, and let's say we're looking at a profit and loss report month over month for the last 12 months or the last 6 months, right? We're going to start to see a cycle. So maybe you're an online retailer, and so your sales tick up towards the end of the year. Why? Because it's Christmas and people are buying your product as a gift, or maybe you're an accounting firm like Borrow Team, and things tick up towards the end of the year into Q1. Why? Because everybody doesn't really think about their financials until it's time to file their taxes, and so everybody signs up towards the end of the year. When do your expenses go up, at different points in the year? Maybe you have certain times of the year where you have to, ramp up on purchasing items in order to prepare for future periods, et cetera. You want to look at all of the aspects of what your financial cycle looks like, and where are your highs and lows, because you can also plan cash-wise for that and know when, I might be light on sales during the summer months. I should probably put some money away, during my busy season at the beginning of the year in order to make it through and carry me through where I know that I'm going to have 3 months of losses. So that's the benefit of looking at that. And then the next thing is understanding the variances. I kind of already touched on this, but looking at the differences between why you have a higher expense or lower expense, or a higher revenue number and lower revenue number month over month. Maybe you lost a big client, and that's why you saw a huge drop in your revenue from month to month. Maybe you gained a new one. Maybe you gained 10 new clients, and now your revenue is significantly higher than the month before. But you want to make sure that you understand the variances, what's causing them, drill down on the detail, make sure that you're looking at and understanding exactly why things are happening in the financial statements. And then the other thing that I'll say is setting non-financial KPIs against financial data. So, how many widgets did you produce of X during the month, right? And how did that translate to an increase in revenue? What was the percentage increase in revenue? And KPIs stand for key performance indicators. There are key performance indicators that are set by industry standards, but then there's also KPIs that you could create for yourself just based on your knowledge of your business. And you can compare those KPIs for yourself against your own financial data. I don't know if Terry has any insights on this one, but I thought you might. So,
I do actually, and we highly advocate setting a bold goal for the next year and then a conservative goal for the next year, and then mapping your financials and your actions to that. So for those of you, for example, that have gone through demand generation, if you said, okay, if I want to increase my business by 30%, and that's my goal, and then my stretch goal is going to be 50%, you should be able to calculate how many new friends you need to generate in order to hit that goal. And those are the parallels that you really want to drive. If you don't just want to have the financial goals set out, but how many new friends do you need? If you remember that, how much more awareness do I need to generate? How many more activities do I need to do in order to hit that? But if you'll bring those activity KPIs together with your financial goals, you stand a much better chance of hitting those. So highly, highly recommend that.
Right. And so just to wrap up, right, the whole point of this and what you're doing this for is to use this information to make informed decisions. So hopefully, some of the things I talked about today are things that you can put in place right away. The first thing that I think you should start with, by the way, is if you don't already have a cloud-based accounting software in order to keep track of all of this data and information, I highly recommend that you get one. Whether that's QuickBooks or Xero or whatever it is. Using Excel can often be very cumbersome and time consuming and not an efficient use of an entrepreneur's time. So make sure that you're leveraging technology in order to make your job easier and make the most efficient use of your time so that you can use all of this information in order to make informed decisions. That's it.
Awesome. Giuseppe, thank you and your team for joining us. A couple of things I want to say to our members. One of the partnerships that we started seeking out in the very beginning was a partnership like we have with Borrow Team, because the first thing that we recommend that you outsource is bookkeeping, because it's the least value add and you really need somebody who knows what they're doing to get you the insights that you need to run the business and to take the time to explain what it is those wonderful reports mean so that you can make good decisions. So when we partnered with Borrow Team, we were very excited because one of their team members is actually a member in SHIFCO. We got to know her, and then we got to know Giuseppe and his team. And Borrow Team has a special discount for SHIFCO members. They waived their setup fee 100%, which no one gets, but they also would give you the first month free on their platform, which also is not something they normally do. And we don't take any compensation from our partners. We really want to pass that on to our members. So if you're interested in talking to Borrow Team to help you, you can reach out to Allie and you can find her on the SHIFCO member role. And Giuseppe, I just want to say that Allie has been a delight to work with, as Donovan has been. We love working with your company. We love that you guys are a partner for us, and we're looking forward to how we can grow together and help our members grow.
Awesome. Terry, we love you too, and we really appreciate the sense of community and education and all of the knowledge that you're able to impart to conscious business entrepreneurs.
For sure.
Thank you, guys. I want to wrap up with just a couple of points. To me, conscious business is about, giving up the good to go for the great. And I've always liked this John Rockefeller quote. Even though he wasn't necessarily a conscious entrepreneur when he was building his business, he became one over time. And this idea that you don't have to settle. And I really feel like SHIFCO's, what we're about is uniting conscious entrepreneurs, because I think it's through conscious leadership lived out through our business. That's how we're going to make the world better. And that's really what we're trying to do. And as I shared just a little bit about what ShiftCo is, I see ShiftCo as a platform for you to bring your purpose and your ability to earn more profits together. So they're working together to create a bigger impact. And there's three things that our members will consistently tell you. And you can see the video that they said this. You can see quotes on our Facebook page and on our website that they said this. But number one, your business will grow using the platform. That's how we measure our success. We know when a member joins what phase they are in. And we know, like, if they're in launch, in 6 to 18 months, we want them to be in that second phase where their income is $10,000 to $30,000 a month. That's how we determine our success, is did your business grow during the time that you were a member? Secondly, is you will evolve as a conscious leader. There's so much support and mentoring. There's so much that's done off platform, member to member, a mano to mano. There's so much of that occurs together where we're just helping each other constantly. And I like to frequently say, sometimes I'm a teacher and I'm teaching a class, and a lot of times I'm a student. For example, right now I'm in the wellness program. We have a wellness collab going on because I want to take better care of myself physically. And I'm a student. I'm literally in there asking questions like everyone else. And we really see this parity between teacher and student, and that we're all really helping each other. And then the third thing is collectively, we will make a bigger impact. And that's why there's so much collaboration on the platform. How the platform works is you sign up as a monthly member, and the first thing that you're going to get is a mentor who's going to help you map out what you need to grow your business. So they're going to use this diagnostic prescriptive tool with you to help you check which pieces you already have and identify the pieces that you don't have so you know where to focus. Then you're going to get what we call a pathway that's individualized and customized for you. And everybody is working different pathways at the same time. And those pathways teach you the skills you need to learn. They help you get there. You also get a coach. You actually get two coaches. You get a phase coach and a pathway coach. The pathway coaches are skilled in their particular discipline, and then the phase coach is skilled in helping you move through that business phase. The coach works on your specific business, helping you apply them. And then, of course, the community, which you have to experience to truly understand. The training, as I mentioned, we cover business training, leadership training, and personal training. We don't see them as separate things. We're always working on all three simultaneously. And then the last thing is everything is wrapped into this beautiful platform or portal called Shift Connect. And so all of our members operate and collaborate on Shift Connect and connect with each other. They can find each other. They can ask who does XYZ. You'll see that happening. You can say, I need some help with this interview. Does anybody know a web designer? And you'll find that the community jumps in to collaborate with you. So that's ShiftCo. And again, I want to thank our guest speakers today, because the profit side of the business is just as important as the purpose side of the business, because you need both in order to make a greater impact. I hope that you'll choose to grow with us if you're not a member. For those of you that are, thank you so much for being part of our growth and our community.